You know that feeling, right? You scan a QR code, you tap pay, and poof, the money just appears in someone else's account, like magic. Well, in this explainer, we're going to pull back the curtain and show you exactly how that magic trick works.
All right, so here's our game plan. We'll start with that instant pay feeling, and then we'll meet the team of players that makes it all happen behind the scenes. We're going to follow your money on its wild 3-second journey. Check out the safety net that keeps it secure, go over the rules of the road, and finally, take a quick peek at what's next. Let's dive in.
So, let's start right there. At that moment, you're buying a coffee, you scan the code, and seriously, before you've even put your wallet away, the payment's done. It's so smooth, so simple, and it's totally changed the way we think about using money.
But what is actually happening in those few seconds? I mean, come on, it can't be actual magic, right? It's not. It's this incredible piece of technology where a whole team of players works together perfectly, and we're about to meet every single one of them.
You see, every single UPI transaction, no matter if it's for 5 rupees or 50,000, is a team effort. The best way to think about it is like a 4-person relay race. The baton is your payment instruction, and the whole race is over in the blink of an eye.
So here's our team. First up, you've got you, the user. Then there's the app on your phone. That's the payment service provider, or PSP. Next, we have the banks, both yours and the person you're paying. And last but not least, the real MVP of this whole operation, the NPCI, which is basically the central brain of the entire system.
Okay, so your app, whether it's Google Pay, Phone Pay, or whatever, that's your front door to the world of UPI. It's the shiny interface you use to kick things off. But here's the crucial thing to get. The app itself doesn't hold or move your money. It's really just a super secure messenger.
Now, this is where your money actually lives. The banks are the guardians here. Your bank's job is to check if you've got the funds and then to debit the amount. The receiver's bank, their job is to credit it. They are the only ones who ever actually touch the cash.
And that brings us to the National Payments Corporation of India, the NPCI. Honestly, the best way to picture the NPCI is like an air traffic controller for money. When you hit pay, your app sends a payment request. Think of it as a flight plan to the NPCI. The NPCI reads the destination and boom, it instantly routes that message to the right banks, making sure it lands safely. It does this for millions of transactions, all at once. It's pretty amazing.
Okay, now that we've met the whole team, let's actually follow a single payment on its lightning-fast journey. It's a whole adventure that happens in less time than it takes to even say payment sent. But first, we need to talk about this one critical piece of the puzzle, the VPA, or Virtual Payment Address. This is your UPI ID, your name at bank, and this little thing is pure genius, because it's a massive layer of security. It lets you send and receive money without ever having to share your actual bank account number. It's like having an email address for your money.
All right, let's trace the journey. Step 1, you kick things off. You scan the code. 2, your app wraps up that request in a secure package and fires it off to the NPCI. 3, the NPCI, our traffic controller, instantly routes it to your bank. Now, what's really cool about this whole process is step 4. Your bank, and only your bank, asks for your secret PIN. Your app never sees it, the NPCI never sees it, nobody sees it but your bank. Once you're verified, step 5 happens. Money is debited from you, credited to them. And finally, step 6, a little confirmation zips right back to your phone. The whole shebang? About 3 seconds.
Now that incredible speed would mean absolutely nothing if it wasn't safe, right? I mean, this is our money we're talking about. The whole system is built on a foundation of trust, with all these layers of safety nets designed to protect every single transaction.
So let's look at 2 brilliant built-in safety features. The first is something called automaticity. It's a simple idea. A transaction is all or nothing. It either completes perfectly on both ends or it fails completely and everything goes back to how it was. Your money is never left floating in limbo. The second is independency. Every single payment gets a unique ID, so if your network glitches and you accidentally tap pay twice, the system is smart enough to see the duplicate ID and just says, nope, we already did that, and it won't charge you again.
And the security is always getting smarter. It's not static. Right now, every transaction you make uses what's called multi-factor authentication. It combines something you have, your phone and your SIM card, with something you know, your secret PIN. And by 2026, it's getting another huge upgrade, making it even tougher for fraudsters. And if that wasn't enough, on top of all that, there are these powerful AI fraud engines just silently working in the background 24/7.
They're scanning millions of transactions in real time, looking for weird patterns and flagging anything suspicious in milliseconds. It's like having a digital guard dog watching your money around the clock.
Okay, so even with a system this powerful and secure, you still got to have some rules of the road. So let's quickly get into the nitty-gritty, the limits, the fees, and the fine print for how we use UPI.
For most of us, for our everyday stuff, there's a daily transaction limit of 1 lakh rupees. But the system's also flexible. If you need to make bigger payments, like for school fees or insurance premiums, that limit gets bumped way up to 5 lakh rupees for those specific transactions.
So what does all this instant, secure technology cost you for a normal, personal, bank-to-bank transfer? This much. Zero. Zilch. For the vast majority of things you do every day, it costs you absolutely nothing.
But you've probably heard about this 1.1% fee, right? So what's the deal with that? Okay, here's the crucial point. This is a fee a merchant might pay, not you. And it only applies if you pay them using a prepaid wallet for a purchase over 2,000 rupees. So, for your regular payments from your bank account, it's still totally free.
So we've gone under the hood. We've seen how it works, how it's secure, and the rules of the game. But what's the bigger picture here? Well, a huge reason UPI has been so successful is that it just leapfrogged all the old, clunky infrastructure and built a digital-first system from scratch. And that model is now being studied by countries all over the world.
And here's one last cool peek behind the curtain. Even though the payment feels totally instant to you and the shopkeeper, the actual final settlement of money between the two banks happens a little later. It's done in scheduled batches that are cleared through the Reserve Bank of India. It's a fascinating little detail that shows you the difference between the user experience and the back-end banking world.
And that really leads us to our final thought. As this technology just gets more and more invisible, just a seamless part of how we live, how is that going to change our relationship with money itself? When spending is this frictionless, what does that mean for how we save, how we value, and how we think about our finances? It's a pretty big question to chew on. Thanks for watching.